Hi guys, welcome back to the YouTube channel. Today I'm going to do a slightly different video, and this video is basically what I'm going to do going forward with my trading. Just sort of discuss the sort of different things I've got going on. I've got a Euro US dollar chart in front of me, one on the range bar chart on the left hand side and one on the daily chart on the right hand side. Now when you start trading, you're often taught that you have to use candlestick charts because the information that you require is on the candlestick charts, and I do agree. And over the past, I don't know, decade or so that I've been looking at charts, I have obviously been using 99.9% of the time I've been using candlestick charts. There was a period of time when I did use a Heikin-Ashi and I used bar charts, but effectively they are the same thing. It's the open, high, low, close. The reason I'm saying I'd like to start using the the range bar chart is because the range bar chart offers a little bit of slightly different pieces of information that I think would be a little bit more useful for beginners and when they start trading. So commonly we are taught the fundamentals of market structure, being that market moves in high lows and lower highs. So this is a downtrend, this is an uptrend, this is a downtrend. So on a range bar chart, this sort of pieces of information are actually a little bit easier to see, due to the fact that range bars are based off of not price but how far a market moves in one particular direction. So in this instance, on the Euro US dollar, the interval is 500 ranges. So what that looks like is 1950, 1900, it's moving up in pips of maybe 50 on the daily chart, which is effectively something that you can see on this chart here. It's moving up in pips of about 50. So if I put it on a regular chart, you can sort of see. Now, of course, you know, if you look at this chart, it only offers you a little piece of information. There is no fair value gaps. There are order blocks, but there are no fair value gaps, and there's no sort of hammers, pin bars. You are not looking at the daily profile in the way that you might traditionally look at it. So for example, if I'm looking at this period here, if I focus my entire objective on this period here, what you can see is a massive engulfing candle, and then one day where the market previously wants to go higher fails to go higher and then starts heading lower. Now on the range bar chart, this period here is something that you wouldn't be able to see if I just put a black box. This period here, this move into this level of structure here, right, the move higher, the breakdown lower, the move back up that failed to get the highs, and then the breakdown lower, the retest, and then the move lower here. You wouldn't be able to see that on a daily chart, a traditional daily chart, because the information is actually hidden behind the fact that the candlestick chart has closed. These wicks are in fact the market structure. So when a newbie looks at this chart, they obviously see market moving in higher highs, higher lows, lower highs, etc. However, it's actually very difficult to decipher that on this sort of similarly placed candlestick chart, because this level here would obviously provide resistance and support from a daily perspective. However, on a range bar chart, it actually looks a lot clearer in regards to, you've seen that the market has made a move lower, broken above the high, then when it's come down into this level, it's actually retested it twice, 3 times before breaking lower, and then eventually, hopefully, coming back high and retesting this level again. So why am I saying that I'm now going to move on to sort of try to utilize range bars a bit more? Well, because my trading has struggled in recent weeks and months. I've not been online, made very few videos, because my sole focus has been on trying to get myself sort of, I don't know, back in the sync of sort of market structure, and I've not been able to do that because there's too much information. I have too much knowledge for my own good. There is knowledge about obviously There's knowledge about fair value gaps. There's knowledge of order blocks, breaker blocks. There's knowledge of support and resistance. Mitigation blocks. BPRs. There's all sorts of knowledge that I know in regards to market structure that I think is clouding my judgment based on, do I want to long or short based on market structure that looks something like this. You could class this as an order block coming, waiting in, rather than just looking at it from the perspective of a sort of, okay, this was previous support, it's now turning into this is previous support and it's come down, it's now going to turn into previous level of resistance. That is, I think, the difference between using a slightly simpler charting measure or charting time frames such as the range bars in comparison to obviously sort of candlestick charting time frame. So yes, if I go back to just make this bigger, so you can obviously see that if this is, for example, is the 500 range, and I wanted to get a little bit more information about sort of this area here, this swing high, swing low, and then swing high again, I could go down a couple of ranges and actually look at the way that this swing high, swing low was formed. So the swing high, the low, and the swing high again is now showing me that there's different legs to these swings highs and swing lows, right? So you get moves that come up and they come back down, they come up again. All of those indicate different things, and so when you pair that with your daily ICT kill zone pivots, etc., you start to see that on this day, Wednesday, Thursday, Friday, the market made its biggest move on the Wednesday because you had the biggest range in price movement. Monday was a slightly shallower day, and then the market moved to the high side. This is on a 64 range. If I pull it back, you can see that the previous Wednesday's high was the one that we were looking to target on the Monday and the Tuesday, and then now price has come back into, hopefully we want to target sort of this Wednesday's high again as an opportunity for a market to come back into sort of this level here, retest before heading higher, something like this. So again, you can see that it's slightly different. It's much more simpler to dissect a chart or to analyze a chart when you have a little bit less information. I think we've been bogged down in many years with ICT concepts and sort of loads of different things in regards to breakup blocks, order blocks. I mean, if you look at this chart from a candlestick perspective, this move here just looks like it's the point at which this market made a huge move up, right? This would be classed as an order block, and then there'll be this would be classed as a fair value gap, and there'll be other things that you'd be considering in this sort of gap here. But effectively, this is what I'm looking at, and I don't know whether it's going to work. I don't know whether it's going to be successful or not, but I'm hoping to try something different. I'm hoping that it can revive or help me learn different aspects of market analysis, something that I've not tried to do before, because I do find that there is so much information on charts these days. Often we get bogged down because we just don't know whether to stick. I mean, if you've got a daily bias that is bullish, do you enter as soon as the market opens? Do you enter after when London session opens? Do you wait until US session? And by the time you do that, the market will have moved 10, 20, 40 points in your favor, and you've been left behind. So so I'm basically from now I'm going to be moving on to sort of range bars and just sort of seeing whether my trading can be affected in a slightly better way, and then we'll go from there. But this has been it from me, so thank you very much for listening. I will see you guys later. Cheers, bye bye.